Hello traders, my name is John Ajogu. I'm a forex trader and I've been in this industry for the past 8 years. I'm also a lead mentor at CPAG Trading Academy. In this video, I'm going to be unveiling the secret of leverage trading. Join me as I walk you through. If you're here, you have not subscribed to this channel, kindly take a step now. Subscribe, turn on the notification bell, share, like, and comment. Alright, let's get started with knowing what leverage is. In simple terms, leverage is an influence used to gain advantage. An influence used to get advantage. For example, assuming you are in a competition with a child of 10 years, and this child, you guys are meant to climb a 100-story building, and this 100-story building, you guys are going to climb it in less 20 minutes. You have to climb it, and you are looking at this child, looking at the age, maybe 5 years or 10 years up. You already consider yourself a winner because you think you have enough strength than the child to be able to make it. Now, and the whistle to get started was blown, and you started running on the staircase, and the child just smiled, turned to the wall, and what? Press a button, and behold, it's a lift. And the child was lifted to a 100-story building in about 5 minutes. Now, what has that child done? That child simply leveraged. Remember what I told you about leverage? That leverage is an influence used to gain advantage. So this child, what influenced him be on the 100th floor was simply leveraging on technology, which is the lift that he or she pressed to be there. Now, where you that is using the staircase is still running and sweating, stressed up. By the time you arrive at the venue, you already meet them crown the little child for being a winner. That is what leverage is. Now let's move it down to forex and define it in forex terms. Now, leverage is simply a borrowed money that the broker gave to traders. Just like when you want to access a loan in the bank, no bank gives you a loan without you giving them a collateral. So you need to give them something, worth the money or what more than the money before they can give you a loan. So the same thing here, that the broker gives you leverage does not mean just wake up one day and say, I need leverage, borrow me money. No, you must come with something for the broker to be able to give you that leverage. So now is the borrowed money. Now that is why on the platform of every broker, either you are trading demo or you are trading live account, you always see this. You always see things like this, like 1:1, 1:10, 1:100, all the way. So I'm just skipping that. I started skipping them, So all the way to 1:1,000. Some brokers even have 1:1, 5,000. Right? Now, what does this mean? Now, before now, in forex trading, not everybody can trade even when you have the knowledge. Not everybody can trade forex. Before, about 20 years ago, before you trade forex, you must be a very wealthy person. And sometimes you will have two options to look at two businesses. You look for the one that will pay you more. Now, a lot of people do not actually pay attention to forex trading in those days, because why? It is not all that profit. In as much as there is profit in it, it is not profitable today. It does not worth it. It doesn't worth it. Why? Because for you to open a single trade, you must have minimum of $1,000 raw. You must have minimum of $1,000 for you to open a single trade with 0.01. That's the shocking part of. That's the laughable part of it. You're using 0.01 with your $1,000. So which means if you are targeting 50 pips, then 50 pips is going to end up giving you $5 if you're using 0.01. So it doesn't worth it. Imagine investing $1,000 to get $5. So it doesn't make sense to every businessman. You will not look at considering such business. But it's not profiting. It's not so profitable to the brokers, because the brokers are actually there for you to use their platform so that they can make money while you trade. When you open a trade, the brokers make money by charging a spread. So the brokers now came to sit to think about it. So how about coming up with a concept where we have thousands of clients coming up to trade using our platform than waiting for few that have up to 1,000 or 10,000 or $100,000 before we can give them access. That's when they come up with leverage. Now that leverage now gives you the opportunity to have $100 and you're using one standard lot. Remember, I told you that in the past you have $1,000 and you can only open one single position of 0.01 lot size. But this time around, you can have even $50 and trade like someone that have $50,000 or $100,000. That is why, because the broker gives you what? Leverage. Now, depending on the leverage you choose, if you come in with your $100, for instance $100, and you choose a leverage of 1:1, you choose a leverage of 1:1 here, then it simply means your $100 remain your $100. You may not be able to open the trade. Now, if you want to test this thing practically, this thing I'm telling you, I'm sharing with you, please can go and fund the account $100. Go and choose 0.01. Sorry, go and choose 1:1. Choose 1:1 as your leverage. You see that you'll be able to open a trade. You come with $100, for instance. We're working with this. This is the money you came with. So with this your $100, you are in. You have this $100 in this market. So now with this your $100, you want to trade, but what you choose was 1:1. Choose 1:1 leverage. You'll be able to open the trade. But when you choose 1:10, it simply means that every $1 in your $100 is being seen as $10. Do you see that? Do you see the magic? In this case, every $1 is seen as $1, so it's the same money. So nothing to leverage more. But when you choose 1:10, it simply means every $1 in your $100 is being seen as $10. That's the implication of it. So which means with $100 you can now trade as someone that come in with $1,000. That's when you cannot open with 0.01. You cannot open more than 0. You cannot come with $100 and select 1:10 and be able to open. You now be able to open the trade with 0.02. It's not possible. You can try this. Practically try this, even maybe using demo and all of that. Now, if you now choose 1:100, it simply means the market now sees you that you come in with $100,000. Sorry, I mean $10,000. The market sees you that you come with $10,000 because every $1 in your account is being seen as $100. So the market now sees you that you come with $100,000. In that case, you can be able to use even 1 minute. You can be able to use 1 minute. Because let's work it out. If you have, let's say, for 1:10, you have $1,000. You have $1,000, which means the lot size you can use here is what? 0.01. That is micro lot size of 0.0. That's what you can use. So if you now choose the same $100, you now choose 1:100. Now the market now sees you that you come in with what? $10,000. In that case, you can open 0.01 into 10, and 0.01 into 10 will end up giving you what? 0. We end up giving you 0.10. You see that? So now, if you now choose 1:200, the market sees you as someone that came into the market with $20,000. So in that case, you'll be able to use 0.02, still million. Sorry, 0.2. So now let's fast forward into using 1:1000. If you now come in and use 1:1000, the market sees you that you come with what? $100,000. You see, you are not you want $100,000, but you came with $100. All you need to do is just to go and select 1:1000. And when you select 1:1000, the market sees you that you come in with what? With $100,000. Leveraging on the broker. Remember, leveraging on what? The broker. You are now leaning on the back of the shoulder. You are now leaning on the shoulder of the broker to be able to do what? To trade the market as someone that come in with $100,000. Meanwhile, what you have was what? Was just a simple $100. So in this case, where you have $100,000, you can be able to trade as big as coming with one standard lot size with your $100. You can trade 100 standard lot. You'll be able to use, one standard lot. You can be able to use one standard lot on $100. That is how it is possible for you to use $100. And if you make one per pip on $100, you make what? $10. Remember, the money you came in with was very, very small. But you are now leveraging on the broker, you understand, which is an influence to be able to gain much higher, like someone that is using $100,000. So you can imagine when you make 10 pips with this standard lot size, you end up making $100, making doubling your account immediately. That is what leverage does. Now, practically, I'm going to show you this, how this thing works. Okay, so let's open a demo account here. I select any of them. You can use any of the platform, MT4, MT5. So now look at this. Let's say you can see the currency now leverage. Of course, let's say if I want to choose, let's say $5,000 for instance, and I want to use select. You can see what I told you. See 1:1, 1:10, and all of that, right? This one stopped at 1:500 because I choose the premium demo. Okay, let me use the other one so that you can see it very well. I use the premium, so let me use the contest. Let me use this one and see if I have more than that. Oh, this is not giving us that. Let me try another one so that you can see. Most of the brokers, they don't have up to 1,000. Some have up to 1,000. That's the point I'm trying to raise here. So some of them have. Let me see this. Okay. So since this doesn't work, these guys don't have up to 1,000. Let me just use one that is available here. So I'm going to use what we have that is available here. So let's go to any of the platforms. Let's say MT5 for instance. Then here I'm able to choose my leverage. So you see all those leverage I mentioned, they're all here. So I'm able to choose my leverage. So if I decide to choose 1:500, and I'm choosing, let's say, $5,000. So which means I want to be able to access about 25. How much would that be? That would be about $25,000. Is it 25? No, $250,000. That's what I will be able to access, or even more. My calculation is not just right now. So all I need to do is just to multiply this by each of the dollars here. I'll be able to know what I have here. So I'll be able to trade as, okay, let me quickly do that so that we'll get the right figure, what I may likely get trade like. So I have, yes, times 5,000. Okay, I'll be trading like someone that came in with $2.5 million. With this selection, with my $5,000, I can open position with someone that came in with a cash without leverage and came with $2.5 million. That is exactly what is going to give me access to, right? So that is what leverage is about. So before you trade, you must always go and choose your leverage. So when you choose your leverage, that is when you are now into what? Be able to use the market. If you go and choose 1:1, if you go and choose, let's say 1:1 right now, then it simply means your 5,000 becomes your 5,000. The only trade you'll be able to open up here is you open lot size of 0.05. That's the highest lot size you can use here. But when I now choose either, let's say 1:100, 1:100 will give me about $50,000. Sorry, $500,000. That's what it's going to give. It's going to give me. I'm going to be trading with $500,000. That's what it's going to give me. If I choose 1:100, I'll be able to trade like someone that has $500,000. Applying the right lot size, I'll be able to use a standard lot size, and I'll make my money. So that is what leverage is all about. So you need leverage. Now, as much as you need leverage, as sweet as leverage is, there is something you must understand about leverage. Now, don't over leverage. Now, what leverage does is, I call it two-edged sword. I do tell people, I say leverage, it kill it and make it alive. How do I mean that it kill it and make it alive? Let's say I select a leverage of 1:100, and I'm coming in with $100. Now, what it means is that I am now trading with $10,000. I'm trading with $10,000, right? So with this, I can open 10 positions with 0.01, or I can open 1 position, right? And if that market, let's say I enter a trade, I'm reaching 20 pips, and I'm using 0.01, that's 1 minute, and that market goes against me in 20 pips, I've lost $20, right? Now, if I'm using 1:10, then the market sees me as coming $1,000, and if I lose 20 pips, I'm only going to lose $2. You see the difference? So the more leverage, the more exposure to risk you have. The more you are exposed to risk, the higher the leverage. Now, if I now come in and I use 1:100, and it's 1:1,000 leverage, then it's simply the market will not see me as someone that come in with $100,000, right? Now, guess what? If I take, I'll now be able to use one standard lot. If on that one standard lot I initiated a trade and the market go against me just 10 pips, I have lost my entire money. I don't have any money left. So as much as leverage is good, do not over leverage. Do not over leverage. If over leverage, you are exposing yourself to more risk. Now the question is, what risk? Which is best leverage? I'm going to be covering that in our next video, the best leverage to use. But here, I don't want to deviate from the topic of discussion. Just wait to understand what leverage is, how you can use it to advantage. So we all use leverage. So now remember, the broker is giving you this leverage not because they are just how do I put it? Not because they are a charitable organization or whatsoever. They are giving you this leverage because they are also in business. You can imagine if you have you are waiting until you have $1,000 before you start forex. Most people will not be trading forex. Even me, I won't be trading forex. Because I remember when I started trading, I funded my first account. I think it's about $100. So you can imagine if I'm waiting until I have $1,000 before I start taking trade, I won't be able to trade. So the brokers, my first broker charged me, or the benefit they got from me for placing a trade on their platform, they don't have gotten that benefit. So they are giving you for mutual benefit. They give you this leverage so that you can make money. They make money as well. Because if you don't fund your account and start taking trade, they won't make money. That's why most brokers will give you on their platform that you can deposit up to $5. And people tell me, with $5 I can get started. With $5 you're only benefiting, you are only making money for the broker, because you can't take $5 to a certain amount of money. A certain amount, let's say $1,000 or $100. It's always very, very impossible to do. At the end of the day, you blow that money. So they have benefit from that money. They have charged you spread. They have made money from it. So the brokers now made it possible. So with your $5, even some people $1 you can trade. You understand? All because of leverage. Without leverage, you'll be able to have those assets. So that is all about leverage. So with these few points of mine, I hope I've been able to convince you and not to confuse you that this is all you need to know about leverage. So right now, you'll be doing all of this, maybe unconsciously, without knowing what you're doing. You now know better. You now have a better understanding of what leverage is all about. So I'm going to be coming up with another video on margin, what margin is all about, and relating that to leverage is going to give you a better understanding of your trading window. Thank you very much for your time. Please do not forget to subscribe to this channel, share, like, and comment.